From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Wednesday edition with a new test for the bond market just as reciprocal tariffs kick in and China hits back. I'm Mathieu alongside Kailey, Leinz in Washington. Thanks for being with us here on the early edition of Balance of Power on Bloomberg TV and radio. Kailey, China put 84% tariffs on U.S. goods here, and the disconnect that we've seen between the stock and bond markets continues to widen.
Yeah, of course, they're continually jolted by each and every bit of tariff news, as it's not clear whether or not the U.S. and China are even willing to get to the table to try to negotiate a deal, or if this is something that could actually cut off effectively the trading relationship between the two largest economies. And that is a lot for financial markets to contend with. We have flipped, I don't even know how many times, between positive and negative territory on the S&P 500 today. And in the bond market, you're seeing once again incredible upward pressure on yield. So selling in treasuries, too, no longer, it seems, seen as a safe haven asset, as we're up another 17 basis points on the 10-year today.
Saw 4.5% earlier. Sell everything American seems to be the charge at the moment. And we're about to experience this Treasury auction that could bring a lot more noise here. Just what we need is more paper.
Yeah, well, it's going to be a real read on demand for U.S. debt, that's for sure. And we're going to have a readout of that auction from Ira Jersey of Bloomberg Intelligence in just a moment. But we also have to consider the wider economic ramifications here. Bharat Ramamuri, who used to work in the economics at the Biden White House, is going to join us as we have the administration, of course, contending that all of this is about short-term pain for long-term gain.
That's right.
Bringing back American manufacturing is what it's all about.
Be cool.
Be cool,
the words of President Trump
great time
today
to buy.
On Truth Social. A great time to buy. I guess there's a little bit of a bid, but it depends on what minute you're looking.
Yeah, we'll see how long it lasts because this buying of the dip hasn't seemed incredibly persistent in the last few days. Charlie Pellet has been tracking each and every move for us, and he, of course, is in New York. Hey, Charlie.
Hi, thank you very much, Kailey. Leinz. Indeed, a lot of people on Wall Street, everybody glued to their screens, awaiting fresh news on tariffs, and, of course, the Treasury auction of 10-year securities, closely watched as a further test of sentiment. Our Ira Jersey is standing by. He will have the latest for you coming up in just a moment right here on Balance of Power. Right to the numbers. We got stocks pushing higher. We're close to session highs right now on the S&P. Has been a volatile day, though, with the S&P up 52 right now, 5,035, up by just about 1%. We've got NASDAQ up 300, higher now by 2%. The Dow up 305. That is a gain of 0.8%. 10-year right now, 4.43%. The 2-year, 3.78%. Gold up 108 the ounce, up 3.6%. And West Texas Intermediate crude down 3.6%, 57.50 for a barrel of WTI. JP Morgan Chase CEO Jamie Dimon says a recession is a likely outcome of the turmoil tied to President Trump's tariffs. He made the comment on Fox Business. Recapping, S&P up now by 1.7%. Balance of Power continues. Back we go to Washington. Once again, your hosts, Mathieu and Kailey Leinz.
All right, Charlie Pellet, thank you so much. We, of course, had our eye on this 10-year bond auction. The pre-sale, when issued, yield 4.46 roughly, and the actual auction drawing 4.435. So actually a bit more demand, it seems, coming through a lower yield. You're starting to see that ripple through the Treasury market. As I just mentioned seconds ago, the U.S. 10-year yield was up 17 basis points. We're now up by still a large amount, but less, 11 basis points, the 10-year yield right now at 4.41.
We seek insights from Ira Jersey, Bloomberg Intelligence chief U.S. interest rate strategist, and just the voice that we need right now. Ira, what's your reaction to this auction in the first moment of trading?
The market cheapened up enough that investors came in like bandits. In fact, this was 88% was taken by investors, and that's, if that's not a record, it's very darn close to a record. I think that all the cheapening that occurred recently was in a way to make room for this auction. So you probably had dealers who were very long treasuries, got out of some of their treasuries, and at the same time you had investors that said, hey, we could have bought 40 basis points ago, but look at 4.35%, 4.4%, this seems pretty good. So yeah, so we what we did, it stopped short 2.5 basis points, so lower than what the market was expecting right at 1 o'clock. And the auction internals were fantastic. So there was stronger demand than last month. There was very high demand from end users. And I'm not going to say that everything's great now, but this is definitely a positive sign, especially given yesterday's 3-year auction was so atrocious.
Well, so to that point, Ira, does this at least for now put a little bit of cold water on the treasuries are no longer seen as a safe haven asset thesis we've seen emerging in the last few days?
Yeah, I think it does a little bit. Yeah, you know, the issue is, see, I think a big part of this move is not necessarily fundamentally driven. I think some of it maybe started that way, but positioning was so one-sided where a lot of people were long. The dealer community was full of treasuries. The foreign investors, you know, they balked a little bit maybe at buying in the recent past. But we still see treasuries as a, you know, quote unquote safe haven asset. I think that the risk is that we could still see a lack of foreign demand because, you know, do you want to be buying treasuries in a situation where, you know, the administration is attempting to reduce the amount of dollars that we export to the rest of the world. So so there could still be some volatility, and we still have to see like who are the actual buyers. Unfortunately, we don't find out for another week and a half or so who the actual purchasers were, whether they were foreigners, domestic investment funds, banks, right? Those things we find out a little bit later. But on the surface of this, it seems like some people at least made room or liked the cheaper levels that they were able to buy these treasuries at.
Ira, what does the last week mean for Scott Bessent's drive, his obsession with 10-year yields, his drive to lower yields? He says, you know, don't pay attention to the Fed. We're worried about the 10-year.
Well, so that there's a couple of pieces there. So number one is the 10-year itself is going to be driven by the front end rates, right? So the whole term structure of interest rates starts with the Fed funds rate and where the Fed sets policy. So you can't disentangle that from the 10-year. The other thing is that in order to really get the 10-year yield meaningfully lower without the Federal Reserve cutting interest rates, you do need to reduce the deficit, right? And that's one of the big things, and maybe what the administration's hoping will happen. You know, how much will that be worth? It's hard to gauge exactly how much that meaningful deficit reduction would have, but it would be worth something, right? It would be 25 basis points, like some number. We can only guess at what that would be. But on the other side, I think the thing is you want to make sure that there's strong demand for treasuries, and by decreasing the level of the deficit and having the deficit at least lower than economic growth, so you get debt to GDP lower, that makes the U.S. debt seem more sustainable. That can drive people into the market, and people would be happier to own treasuries in that environment, I think, and that certainly is something that could, you know, marginally keep rates lower. But ultimately, you know, 85% of where treasuries are going to be is going to be based on monetary policy and expectations for where the Fed's going to go.
Well, so with that in mind, Ira, less than an hour from now, we get the minutes of the March meeting. Obviously, backward looking, no one knew at that time exactly what the reciprocal tariff regime from President Trump was going to look like. And we've heard Fed speakers since talk about them being more severe than anticipated. So is there anything really the minutes can tell us that might provide additional direction to the Treasury market?
Well, I think it's going to be more interesting than it will be market moving. And so it's things like, what is the Fed's reaction function? How much do they care about the inflationary effects on tariffs versus the growth effects on tariffs? And I think that that's the push and pull that the Fed's going to have going forward. You know, we're of the opinion that the Federal Reserve might be a little bit late to cut interest rates because they'll need to wait until they see meaningful shifts in the job market before they have a reason to lower interest rates. And at least so far we haven't seen that. Now, if we get a 75,000 job print in for April, and then for the May print gets like 50,000, that would give the Federal Reserve, I think, enough ammunition to think, okay, maybe it's time to lower interest rates in June because the job market has been hampered, maybe in part by fear over the tariffs, but nonetheless, like our job is to make sure that we have full employment, and if the job market's falling out of bed, then it'll be hard to maintain maintain full employment and by any by most measures. So then the Federal Reserve could actually cut rates. And but we have to wait for that data to see exactly what animal spirits are thinking. And given the recent market volatility, that's one thing. Yeah. What's going on in the real economy is another. So the other piece of Fed information to look at that they look at very closely is the beige book. So look out for the beige book in a week or so. That will be maybe the key to how the Fed's really going to be thinking about the May meeting.
All right, Ira, thank you so much. Ira Jersey of Bloomberg Intelligence helping us look ahead to those Fed minutes, but also run through the stronger than expected demand in that 10-year Treasury auction, which again has brought yields off the highs of the session. We're now up just 12 basis points on the 10-year to right around 441 as we consider a bond market that, of course, like the stock market, has been roiled by President Trump's tariff policies. The implementation as of 12:01 this morning of reciprocal tariffs on U.S. trading partners, that level 104% on Chinese imports. China, of course, slapping back with 84% levies of its own today. But President Trump, when speaking at an event for congressional Republicans last night, was standing by his case for tariffs.
I really think we're helped a lot by the tariff situation that's going on, which is a good situation, not a bad. It's great. It's going to be legendary. You watch. Legendary in a positive way, I have to say. We're making a fortune with tariffs, $2 billion a day. Do you believe it? They've ripped us off left and right. But now it's our turn to do the ripping. That's okay. We're going to make our country even stronger than it ever was.
So we'll get an assessment on those theories now from Bharat Ramamuri, who is joining us, senior advisor for economic strategy at the American Economic Liberties Project and deputy director of the National Economic Council during the Biden administration. Bharat, welcome back to Balance of Power. It's great to have you back here on Bloomberg TV and radio. I guess you could kind of take which element of the president's words we should focus on first, but this idea that the U.S. is going to make a lot of money off of this, given the levels of just our tariff on China and China's retaliatory tariff back at the U.S., there have been suggestions that that is effectively going to choke off all trade between the two largest economies. What would that actually mean for import volumes and any revenue that you could raise off of imports?
Yeah, that's exactly right. We have this concept in tax policy where if you raise the tax rate so high, you actually generate less revenue because you have less income or whatever it is that you're taxing. And the same idea would apply here, where if you are raising these tariffs at such a high level, which you are seeing in the new rounds of escalation between the U.S. and China, that the total amount of imports actually drops to the point where even with the higher tariff, you're not generating as much income or as much revenue as you used to. But, I think to the broader point in that clip that you just played from the president, he clearly thinks that if we have a trade deficit with some country, that country is ripping us off. And I think that fundamental misunderstanding about how the global economy works is underlying this whole charade, this whole attempt by the president to rework the global trade system so that the United States has no bilateral trade deficit with any country in the world. And I think it's just simply unworkable. If you look at an example like Madagascar, we have a trade deficit with Madagascar because we import a lot of vanilla from there, and they're not particularly wealthy, so they don't buy a lot of U.S. exports. Is that Madagascar ripping us off? And does it make sense for us to put a massive tariff on vanilla from Madagascar to make it more expensive for Americans who want vanilla just to eliminate that trade deficit? It doesn't make sense to me.
So let's go further down that road, Bharat. The president said last night, as we just heard, now it's our turn to do the ripping. So what does that mean for vanilla?
Well, look, it says to me that we're not anywhere close to out of the woods yet. And people always ask me, what is going to pull us out of this? And my answer to them is, I don't know if there is any way out of this except going all the way through it. You have a president who is clearly doubling down on tariffs and increasing them in many cases and shows no interest or willingness to back off. You have Republicans in Congress fully backing the Trump agenda. Just today, there was reporting that House Republicans are putting something into a bill that would prevent anybody in Congress from taking away the tariff power from Trump, even if they wanted to. There's been court challenges filed to challenge the ability of the Trump administration to impose these types of tariffs. We'll see how those go, but this is an area where the president does have quite a bit of flexibility, so it's not clear that the courts are going to be the savior here. And you had Jay Powell, the chair of the Fed, saying last week that the Fed isn't particularly interested in jumping into this environment. He's still concerned about keeping long-term inflation expectations anchored. So of all the actors in the system that could potentially stop this, it's not clear to me which one is going to be able to.
Well, and it, I guess, becomes a question of what else we are stopping, if it's just the policies themselves or the economic ramifications of said policies, Bharat. How quickly and easily could we stumble into a recession here?
I think you've already seen people raising their expectations for a recession this year. I think you're going to see it very soon. I mean, actually, if you look at the data from February and March in terms of consumer spending, retail spending, business investment, some of those qualitative factors that your previous guest talked about, with businesses saying that they were pulling back on plans for investment because they were unsure about how to navigate the tariff situation. All of that is going to be hitting the economy very, very soon. We haven't even started experiencing all of the price increases that we're going to get from these tariffs. And that's going to lead to a significant consumer impact. It's going to lead to more uncertainty among business community. And I would imagine that the odds of a recession as soon as the second half of this year, in my mind, are quite high.
We heard from Jamie Dimon a little earlier today, was on Fox Business, asked about the prospect of a recession. Bharat, here's what he said.
Are you hearing that from CEOs as well in terms of business managers? Are they now going to start pulling it in and cutting back on various expenses?
I think you're going to see a little bit of that, yes.
Yeah. But how significant would you expect that? Do you personally expect a recession?
I am going to defer to my economists at this point, but I think probably that's a likely outcome.
Larry Fink earlier this week on Bloomberg, Bharat said he thinks we may be in one already. Are we in a recession now?
Well, as I said, some of the data from January, February, and March, to my mind, was pretty concerning when you saw the pullback among both business investment and retail spending, very soft retail spending numbers for February, for example. I'm not sure if we're in a recession as we speak, but I think that adding all of this tariff impact on top of that pullback that we saw at the beginning of the year puts us on the trajectory for a recession in the second half of the year. And I think it would be one of the few recessions in American history, maybe the only one, that was completely the result of a single person's complete misunderstanding of how the economy works.
Well, he wants to reshape that economy, he argues, Bharat, revive American manufacturing. In our final 90 seconds here, what would actually have to happen to the wage structure, cost of living considerations in the United States if we actually are to bring back workers, in the words of the Commerce Secretary Howard Lutnick, who are actually screwing the screws into iPhones, doing work that has been up until this point outsourced to other countries in recent decades?
And look, as you noted, I worked in the Biden administration. If you look at the data, it's very clear there was a surge in investment in American manufacturing in 2022, 2023, and 2024 under the Biden presidency. That was accomplished by doing targeted investments in American manufacturing through the Inflation Reduction Act, through the infrastructure bill, through the CHIPS Act, bringing all of that onshore, paired with some targeted tariffs on China and on steel and aluminum and some other specific sectors. Doing this across the board in the way that they have done completely undermines the ability for American manufacturing to recover. Remember, American manufacturers, in many cases, rely on some inputs that come from abroad. So by imposing tariffs across the board, what you are doing is driving up the costs for American manufacturing, which makes the value proposition for investing in American manufacturing worse than doing it in Southeast Asia or China or South America. So it's really, like I said, I don't want to overstate it, but it's really almost like an act of arson on the economy. And it's based on some theories about how the economy can and should work that really aren't grounded in fact.
Bharat, good to see you. Bharat Ramamuri, Senior Advisor for Economic Strategy at the American Economic Liberties Project. Live with us here on Bloomberg TV and radio, the 10-year yielding 4.38%. We'll have much more with our panel coming up next. Rick and Jeanne on the way in here on Bloomberg. Make sure to subscribe to the Balance of Power podcast. Get to Apple or Spotify, whichever you prefer. Find the show and subscribe. Watch us live right now on YouTube and listen anytime at Bloomberg.com.
Running us through the market reaction, instant reaction to the post on True Social we just got from President Trump. It's kind of a first it's sour, then it's sweet scenario. I'm actually going to lead with the sweet part at the back end of this post, Joe, because that's what's driving markets. The president suggesting, based on the fact that more than 75 countries have called representatives of this administration to discuss and negotiate a solution to matters of trade, he says countries that have not retaliated in any way, shape, or form against the United States, he is authorizing a 90-day pause on the tariffs and a substantially lowered reciprocal tariff during this period, he says, of 10%, also effective immediately. After he led this post by saying effective immediately, he was raising the tariff on China, which has retaliated, to 125%, but clearly risk assets and others are seizing more on the 90-day pause for everyone else ex-China.
Guess he read Bill Ackman's tweet.
Yeah. This is exactly what he suggested.
Based on the lack of respect, kind of interesting. We've got a red headline now in the terminal. This is all happening before our eyes here on Balance of Power, which is something that we're getting used to these days. 90-day tariff pause on non-retaliating countries. Remembering Scott Bessent warned them not to retaliate, suggesting their behavior might be rewarded. And here we are today, just hours after retaliatory tariffs went into effect.
We're now up nearly 7 percentage points on the NASDAQ 100 as a result of this. Just goes to show you how eagerly markets were waiting for anything they perceive as positive news on tariffs. True. Clearly, this pause being read that way.
And answers the question that this market could, in fact, rally after being so technically broken. Clearly a market hungry for news. And our political panel is at the ready here. Bloomberg Politics contributors Rick Davis and Jeanne Zaino are with us. She is, of course, Democratic analyst, senior democracy fellow with the Center for the Study of the Presidency and Congress. Rick, partner at Stone Court Capital. President Trump said, Jeanne, it's a good time to buy right now. Is he right?
Well, yeah, I think this is the first sign we've gotten in the last week that the president may be listening to the markets and that wiser and cooler heads may be prevailing over his decisions. And so I agree, the 90-day pause, very, very welcome news for everyone. But I do think this raises other questions. If this was all about negotiating, then is he still interested in reshoring? If this was about raising revenue, it can't be a negotiating tool. And so what this was all about, this uncertainty and all of this destruction, is a big looming question. And I think his supporters have the right to ask that, particularly those folks in the UAW who, against a lot of odds, have supported him throughout this, last week as he's raised these tariffs around the world and talked about reshoring and permanent tariffs and never giving up.
Well, certainly buyers are not giving up right now. They are having a grand old time, it seems. We are approaching an 8%, now crossed at 8% gain on the day for the NASDAQ 100. That would be the biggest single-day price move going back to the depths of the COVID pandemic in March of 2020. The S&P 500 right now up 6.5%. Take a single stock like Apple, it's up the better part of 12 percentage points. NVIDIA around there as well. Nike, some of these countries we know were highly vulnerable in this tariff scenario are rallying in a big way. Nike is up the better part of 8% too. And Rick, all of this coming after just hours ago, the President Trump told the public it's a good time to buy. Did the president just decidedly make a choice to help out financial markets here?
It's hard to tell, obviously, the trade news is positive, but everybody's been watching all day for this Treasury benchmark sale, and $39 billion went on the market, and it was a very well received auction. So it could be a combination of all these things. It could be any one of these things driving the outcome. What I find fascinating is the fact that Donald Trump's kind of predicting people, buying at the, dip and then actually making news within the trading day to affect that. I mean, we're in uncharted territory here when it comes to market manipulation. And I'm not suggesting there's anything of malfeasance involved in this, but you certainly have markets reacting both on the upside and on the downside of every word that is uttered out of Donald Trump's mouth, specifically to tariff policy. And this is big news to ratchet up your tariff war with the biggest trading partner and other largest economy in the world, China, and at the same time giving relief to those people who aren't arguing or aren't retaliating. And We don't have a list of who they are. We assume that it's within that core group of countries that he's already raised tariffs with, and will now delay their implementation, at least on the reciprocal side, for the next 90 days. But to think that this is going to add any stability to the markets, I would be shocked and surprised.
It's pretty wild here. The S&P 500 now up 7.3%. The NASDAQ is up by almost 9%, Jeannie. Tesla, by the way, rising 11%. It's back above $247 here in heavy volume, remembering that Howard Lutnick suggested that people buy the shares. He said a lot more than that, actually, at the time. This is when the stock was at about $235. He said to Fox, $235.86. Buy the stock. It'll never be this cheap again. Donald Trump, this is a great time to buy. Rick Davis just said it out loud. Did Democrats start accusing this White House or calling for investigations into market manipulation?
Oh, I think they absolutely are going to do that. I think that we will be hearing about that. The reality is that we have a president who has just, with the sort of stroke of a pen, but it's not even that. It is just going on Truth Social, can move this much of the market. And you bet that Democrats are going to be wanting to ask questions. The problem is investigation is hard in Congress when you are in the minority. So that'll be trouble for them. But I do think that the president is hearing from these folks who have been hurt badly. And, you've mentioned Elon Musk. You've mentioned a few of these people. Bill Ackman, Dave Portnoy is a big voice, and he has been saying he would consider even voting Democratic if this continued. Ken Langone. So a lot of people very close to Donald Trump who've lost a lot of money. So I think we are certainly going to hear Democrats call for investigations.
All right, Jeanne, Zaino, and Rick Davis, our political panel, Bloomberg Politics contributors, the both of them. Thank you so much for being with us as we contend with this breaking news from President Trump. Yes, maybe bad news for China, as that tariff is immediately going up to 125%, according to the president. But for those who have chosen not to retaliate against the U.S. measures, a 90-day pause will also be immediately implemented, and it has had an immediate impact on financial markets off of the dramatic highs of the session. But we are still talking about some very big moves here, Joe. 7.5% rally on the NASDAQ 100, more than 6% on the S&P, and some of the individual movers incredibly remarkable as well. Apple up double digits, Nvidia the same.
Remarkable strength in this rally here, and this is only a couple of minutes old. You wonder how much longer we can keep this kind of momentum in a market that has been so badly beaten down. Remarkable in real time as we watch this unfold right now live on Bloomberg.
And our colleague Scarlett Vu is watching it unfold with the rest of us as she prepares to get us counted down to the closing bell later. It's a very different story, Scarlett, than what we were dealing with just a few minutes ago.
Yeah, we were wondering whether the stock market was going to extend its declines, and it looked like we were bouncing around all morning. But this was kind of the signal that everyone was waiting for. They were waiting for President Trump to back off of his tariffs. He did that for the countries that are negotiating, and this is something that the administration has been very forthright on. Positing all the different countries that have been coming up and making phone calls and trying to reach out to speak with the administration about some kind of negotiations, even though it's not clear what exactly would move the Trump administration to remove or mitigate some of those tariffs. What's notable here is President Trump's comments about, encouraging people to buy the stock market. I wonder to what extent he's trying to call the market bottom in the similar way that President Obama did back in March of 2009. Obama spoke on March 3rd, and just over a week later, the market hit its low point, and from that point on, moved higher.
We're talking about a social media post here, Scarlett. We don't have an actual piece of paper from the White House. We don't even know exactly what countries qualify as non-retaliatory.
Yeah, good point.
We do have to acknowledge the fluidity here in this market and the stakes after such severe losses. Why should investors have confidence in anything to do with tariffs right now?
I don't know that it's confidence to do with tariffs, but for now, this is a bit of relief. This is a respite from the constant selling and the bad news. On Wall Street, the projections that the U.S. economy would tip into recession have been steadily growing. A lot of people, including Larry Fink of BlackRock, were saying that many company executives were telling him that the economy was already in recession. So it kind of became this default scenario that we were in recession, and it would be only a matter of time before the data backed that up. So this is a break in that bad news story. So far this week, we've seen the bad news really turn to the bond market. Last week was all about the stock market kind of in collapse mode, and it's been a lot more fluid, volatile this week, but the bond market has really taken it on the chin this week, and there's a lot of question marks over whether this is fundamentally driven or technically driven.
I just want to point out for those who have been following the commentary of Bill Ackman in regard to tariffs, who, as Joe reminded us just moments ago, did push for the 90-day pause to begin with, which is what Donald Trump seems to have decided here. He posts simple message on X now, just thank you. Nothing else. So I guess he likes what he's seeing here, just as risk asset investors do. But Scarlett, it's remarkable that we get this news today after we already have learned today about instances of multiple companies making decisions or having to issue guidance that is unclear or pull that guidance because of these tariffs. Delta, of course, not willing to stand by a forecast. We had Bloomberg reporting of Amazon actually pulling orders of inventories on goods coming from China. Already, this is affecting corporate behavior, even if the president has now decided that there will be a pause, at least in some instances.
Yeah, absolutely. It's difficult for any company to go out there and say very much about how they anticipate the year to shape up when they don't know what's going to happen. At the end of the day, nobody knows anything. And to give firm numbers is just inviting scrutiny and inviting people to knock your stock down when it won't come to fruition. And I think that's pretty much the case. We were speaking with a pharmaceutical analyst who was talking about how this promise by President Trump to impose tariffs on the pharmaceutical industry is, of course, meant to encourage these companies to move their manufacturing back to the U.S. But because their supply chain is so complex and it would take years for them to do so, they're not ready to commit to anything else. They already have a lot of their manufacturing, their high-value manufacturing in the United States, but they are able to bring in a lot of their products from overseas, into their warehouses and work off of their inventory. They probably have a 2-year waiting period where they don't need to do anything and can see how this all shakes out.
Bloomberg's Scarlett Fu in the throes of the rally. Right now, the S&P 500 up 390 points, almost 8%. Kailey, the NASDAQ is up by more than 9%. A powerful move here. 1,455-point rally as the Commerce Secretary takes to Twitter. Scott Bessent and he writes, retweeting or showing a screen grab of President Trump's post on Truth Social. Sat with the president, he says, while he wrote one of the most extraordinary truth posts of his presidency. The world is ready to work with President Trump to fix global trade, he says, and China has chosen the opposite direction. Yeah, interesting moment here for this administration.
It certainly is, and quite a split screen between what we're seeing the markets reacting to and the reception, at least the majority of countries subject to reciprocal tariffs seem to be now getting from the administration, which is a pause, versus the escalation of what is a trade war with the second largest economy in the world, as the president promises to raise immediately the tariff on Chinese goods to 125% after China slapped an 84% retaliatory tariff on the U.S. Many economists say that effectively is going to mean decoupling of this, and yet the market is seemingly looking through that right now. But when you consider the number of consumer goods that come from China, where like 80% of the share of imports on things like PC monitors, for example, comes from China, that's not easily replaced necessarily, but maybe the good news on what we get from other countries is enough to carry risk appetite through for now.
Interesting to see tech taking off like this, because the prospect of a $3,000 iPhone might not do a lot for Apple shares. But as the rally moves here, we want to go directly to the White House. The press secretary and Treasury secretary just walked into the briefing room. This is live now. Caroline Levitt alongside Scott Bessent on Bloomberg.
Speak to that. We will continue with the tailor-made negotiations that I spoke about yesterday. In the meantime, there will be a 90-day pause on the reciprocal tariffs as these negotiations are ongoing, and the tariff level will be brought down to a universal 10% tariff. The secretary here has been a huge part of the president's trade team, of course, and will continue to lead these negotiations moving forward, to look out for the American worker, which is always President Trump's goal. So I'll kick it over to our great Treasury Secretary, Scott Bessent.
Good, thank you. And we saw the successful negotiating strategy that President Trump implemented a week ago today. It has brought more than 75 countries forward to negotiate. It took great courage for him to stay the course until this moment. And what we have ended up with here, as I told everyone a week ago, in this very spot, do not retaliate and you will be rewarded. So every country in the world who wants to come and negotiate, we are willing to hear you. We're going to go down to a 10% baseline tariff for them, and China will be raised to 125 due to their insistence on escalation.
Ed, go ahead.
Treasury Secretary, thank you for doing this. Let me ask you three quick things, if I could, just for the sake of clarity, because the markets are open and they're wondering. First of all, Mexico and China, are they part of this 10% universal?
Well, China.
Mexico and Canada, are they part of the 10%?
Yes.
Okay. Second, given then that you have the rest of the world essentially calling it, it's not China, is this now just all about China?
Well, it's about bad actors, and what we will see is some of the very early countries are China's neighbors. That we're going to see. I'm seeing Vietnam today. Japan's at the front of the queue. South Korea, India. So we will see. And as I've repeatedly said, and President Trump has been saying it for years, China is the most imbalanced economy in the history of the modern world, and they are the biggest source of the U.S. trade problems. And indeed, they are problems for the rest of the world, because what we've seen is that as the U.S. announced the tariff wall last week, many of those goods have already started flooding into Europe.
So as you see it now, this trade war is China versus the rest of the world?
Well, I'm not calling it a trade war, but I'm saying that China has escalated, and President Trump responded very courageously to that, and we are going to work on a solution with our trading partners.
If I could just, excuse me, Raquel, if I could just add to what the Secretary said. Many of you in the media clearly missed the art of the deal. You clearly failed to see what President Trump is doing here. You tried to say that the rest of the world would be moved closer to China when in fact we've seen the opposite effect. The entire world is calling the United States of America, not China, because they need our markets, they need our consumers, and they need this president in the Oval Office to talk to them. And that's exactly why more than 75 countries have called, because the United States of America is the best place in the world to do business. And as the president has shown great courage, as the Secretary has said, in choosing to retaliate against China even higher. Elena, go ahead.
Hi, thank you, Treasury Secretary Bessent. Can you explain more of the decision-making on what feels like a reversal here? I mean, these went into effect less than 15 hours ago, these tariffs. Why the pause now? What led to that?
No, again, President Trump created maximum negotiating leverage for himself, and which tariffs went into effect 15 hours ago. The ones that we have lowered went into effect a week ago. They were announced a week ago, and we have just been overwhelmed by the response from mostly our allies who want to come and negotiate in good faith. So we are expecting them to come with their best deal. As I said a week ago today, don't retaliate, hold your ground, let's see what happens. And China, they kept escalating, and now they have 125% tariffs that will be effective immediately.
Mr. Secretary,
go ahead.
Mr. Secretary, thanks so much for doing this. The 90-day pause on the reciprocal tariffs, is that because of the whiplash that we've been seeing across the financial markets? How much was, what we saw in the stock markets, a part of this decision?
No, it's because because of the large number of inbounds. We've had more than 75 countries contact us, and I imagine after today there will be more. So it is just a processing problem. Each one of these solutions is going to be bespoke. It is going to take some time, and President Trump wants to be personally involved. So that's why we're getting the 90-day pause.
Mr. Secretary, Mr. Secretary, there was a tweet that you and Secretary Lutnick were in the Oval Office with the president talking about this. Can you talk about what that conversation was like and what you guys said to one another that led to this decision?
Look, it's all the president's decision, and the president had a level in mind to raise the China tariffs, and then he had the 3-month pause in mind, and we were discussing the exact wording.
Mr. Secretary,
Sorry?
It's the president's decision.
It's the president's decision. It was the president's decision to wait until today. And again, as I've said in the past, no one creates leverage for himself like President Trump.
Mr. Secretary. Shelby, go ahead.
Mr. Secretary, what does the president want to see by this, I think it's July 9th deadline to keep things paused? Is it just trade barriers coming down, or is it more than that?
Well, these are trade negotiations, but if countries want to come and offer other things, I talked about yesterday that we are thinking about a big LNG project in Alaska that South Korea, Japan, Taiwan are interested in financing and taking a substantial portion of the offtake. But again, in essence, that is trade because it will decrease the trade deficit that we have with those countries. So everything's on the table.
Mr. President. Raquel, go ahead.
A clarification on the pause. What happened to those countries who just had 10% baseline tariffs, like Brazil and others? Are they still going to have this 90-day pause? Because you were saying that there will be a tariff of 10% for others. So what happened to those who just had a 10%?
Yeah, that's going to remain.
Mr. Secretary. And do you call this an embargo to China?
Pardon?
You call this an embargo to China, a trade embargo?
Well, I'm not sure what you mean by the word embargo.
125% tariffs, like those, and then impose 84%. Isn't this an embargo?
Well, it's not. It's China's decision that we have the deficit with them. They sell us almost 5 times what we sell them. So again, I think it's an own goal by China.
Mr. Secretary.
Mr. Secretary, with this, does this signal that you're confident that you're going to be able to strike a satisfactory deal with all these 75 nations that approach you?
It signals that President Trump cares about trade and that we want to negotiate in good faith. And as I said, each one of these is going to be a separate, bespoke negotiation. So we are confident that having seen the other side of where this could go, and it was like I said last week, the market didn't understand. Those were maximum levels. The countries can think about those levels as they come to us to bring down their tariffs, their non-tariff trade barriers. We're going to discuss currency manipulation, subsidy of labor and industry.
Secretary, as far as you, will the pause also apply to the sectoral tariffs that the president has announced, pharma, lumber, anything else?
No, it's on the reciprocal.
So those will still be coming here soon, right? Mr. Secretary, as far as the negotiations with the 75
Andrea, go ahead.
Mr. Secretary, so I want to ask you about what you're doing here. So the market is reacting crazily, right?
I haven't seen it.
Do you think that this move is going to change and calm down the market reaction?
What?
Do you think the markets have tanked, right? There's been a lot of volatility in the market, not just in terms of stock markets, but also in terms of bonds. So will this move, in your mind, do you anticipate that this is going to calm the markets down?
Well, I think what we've seen, I think the willingness by more than 75 countries to come and negotiate, I think now the market understands that everything they saw last Wednesday was a ceiling, and now we have a 10% temporary floor, and I think the market, my 35 years in the market, I always wanted certainty, so I think we've got more certainty.
But Mr. Secretary, Maggie, go ahead.
Mr. Secretary, why do people assume this is the last word? The president began this morning saying, be cool. 5 hours later, he announces a new policy. Why will investors in the market assume that this is it?
Because, again, as I said, we've given 90 days, and the only certainty we can provide is that the U.S. is going to negotiate in good faith, and we assume that our allies will too. And in terms of certainty, we will see what China does. But what I'm certain of is that what China is doing will affect their economy much more than it will ours, because they have an export-driven, flood the world with cheap export models, and the rest of the world now understands, because when we put up our tariff wall, those exports were already flowing to the rest of the G7 and to the global south.
And you think
Mr. Secretary, how much of this decision was driven by the bond market cratering overnight? What is happening with bonds? Is China selling their bonds?
I have nothing that says that, and we actually had quite a good 10-year auction today, and all this was, again, this was driven by the president's strategy. He and I had a long talk on Sunday, and this was his strategy all along, and that, you know, you might even say that he goaded China into a bad position. They responded. They have shown themselves to the world to be the bad actors. And we are willing to cooperate with our allies and with our trading partners who did not retaliate. It wasn't a hard message. Don't retaliate. Things will turn out well.
What's your message to America? Political articles saying that the countries weren't getting called back.
These negotiations with these 75 countries, how long will that take? Will it be a matter of weeks? Will it be a matter of months? Do you expect financial markets to be stable during that time period?
Well, we've started with a 90-day pause, and we will see if more countries turn up, what will happen. But we have a meeting with Vietnam today, and we have one of the largest trade deficits with them, so I'm hoping it will move in a good direction. I was at the Japanese ambassador's house last night for the Cherry Blossom Festival, which was quite festive, and he and I had a good chat. They are going to send a deal team over, so we'll see. These are complicated negotiations. These are imbalances that have taken decades to create, but I think having seen the maximum level that Donald Trump is willing to go to, President Trump has created this negotiating leverage.
Excuse me, everybody. Excuse me. The secretary is obviously a very busy man. As he has said, he's had more than 75 countries that the trade team has to respond to. I'd just like to end with this. For decades, Republicans and Democrats have said that these unfair trade practices are ripping off the American people, are ripping off our country, but nobody has ever done anything to address it. We finally have a president here at the White House who is playing the long game, who is doing what is right for the American worker and our industries here at home, and he has put together a fantastic team in Secretary Bessent, Secretary Lustnick, the entire trade team who will be focusing on negotiating these good deals to put the American workers first, and we're going to get to work to do that. Thank you.
What about the EU? What about the EU? They retaliated this morning. Why aren't they being...
Live from the White House, the press secretary and the Treasury secretary in the driveway outside the West Wing, sparring with reporters there, answering questions after Donald Trump made clear that the 90-day review period would begin for countries not retaliating to reciprocal tariffs placed by the United States. In fact, took effect at 12:01 a.m. There's a big exception here, and that's China, now facing a 125% tariff. Markets taking off on news of this review. Scott Bessent just now saying we have a 10% temporary floor, and something we've heard him say before, Kailey, the initial Trump tariffs are the maximum level. The idea would be engage with this White House. We start to pull them back. Interesting to hear him suggest the president goaded China into this position.
Suggesting this was his strategy all along. And interesting to hear as well, the press secretary telling the media assembled to speak with these two that they misunderstood or were missing Trump's art of the deal, despite characterizations initially of these tariffs being non-negotiable and not a negotiating tactic. Maybe it all was for the deal at the end of the day.
You wonder if Peter Navarro read that book, because he's been projecting $6 trillion in revenue over the next decade from these tariffs that are, in some cases, maybe never going to take effect.
Well, certainly the market is hoping maybe that's the case. At the very least, they're satisfied. Investors seem to be with this 90-day pause. Again, the NASDAQ 100 nearly 9% higher on the day. It's a 7% gain as we speak for the S&P 500. And it's on that note we turn to our colleague, Joe Weisenthal, who, of course, is the host of the Odd Lots podcast. Joe, is this just proof that investors were waiting with bated breath for the opportunity to buy the dip?
I mean, what I'll say is I think it's evidence that it's a huge relief that there is at least some impulse to take an off-ramp here. And last night, when we saw Treasury yields blowing out and we saw the 10-year hit 4.5%, these are dynamics that happen when there is like extreme stress, illiquidity, run dynamics happening in financial markets. That can't persist very long. When you see moves like what we saw last night, I know the Secretary Bessent there said this was not a response to what we were seeing in market volatility, that it was all, art of the deal, et cetera. Nonetheless, clearly the markets were under extreme distress. And I'll just say a couple other things. The market is, I'm looking at NASDAQ 100 futures. They're still down 5.5%. The China tariffs are still huge. That's going to be, a huge effect on lots of American companies. There's the 10% sort of floor tariffs. Those are still in place. So, look, I think it's a big relief that obviously some of this has been delayed, but I think there's still quite a bit to work through here at a very minimum before there's some sort of like true all clear. Every major index is still like deeply in the red on the year. S&P is down 9.6% on the year.
Yeah, wow. Joe, it's great to have you with us here as this evolves before our eyes. One of the reporters in the driveway asked a really important question of the Treasury Secretary. Why should investors have confidence that this isn't going to change again in the next 12 hours? These just took effect at 12:01 a.m. Speak to the psychology at this moment on Wall Street.
I mean, I think there's two things. It's like, one is like, yes, we've now seen that these headlines can change all the time. I guess like it seems plausible that, okay, for the next 90 days, you get some sort of respite on the non-China companies. But I think even outside of the stock market, you have to think about actual business investing, hiring, et cetera. And we've seen the business side sentiment surveys absolutely horrendous. We haven't gotten a lot of hard data that really speaks to what was happening economically in the middle of March. Earlier in the week, we heard Larry Fink. He said every CEO that he talks to thinks the recession has already begun. Jamie Dimon talking about recession being the base case. So even with the 90-day pause in the non-China countries, it's worthwhile to think about like what the last several days have done for the business community in terms of saying like, wait, you don't know the rules. Now we don't know what the rules are going to be for like 3 months probably. And so we continue to have this environment where if nothing else, the trading relationship is highly uncertain, which at least in the short term is not conducive to investment. But they would probably argue, it's short-term pain for long-term gain.
Well, it's incredible that these headlines hit in the 1 o'clock hour ahead of the Fed minutes, which are due to come out just a few minutes from now, Joe. I guess whatever news we might have seen in them probably overshadowed by these developments, keeping in mind it's backward-looking minutes and they didn't know what the tariff levels were going to be in the first place, let alone that they would be pulled back. But it speaks to the kind of uncertainty we keep hearing Chairman Powell talk about as to why the Fed isn't enticed to move in any direction because so much is so unclear.
There's so much that's so unclear. Short-term market-based inflation measures going up, long-term ones going down. So much uncertainty, soft data going down, hard data still going up. And the other thing is, speaking of uncertainty, look, we all heard the White House's presentation there about the art of the deal, and China has now been goaded to being revealed as the bad actor, et cetera. And okay, that's a fine story. However, last week at the Rose Garden, those reciprocal tariffs were very specifically presented in such a manner that every country that runs a bilateral trade surplus with us, which is almost every country, was per se engaged in bad acting. That that's the whole premise of reciprocity. And so, it's clearly not presented that China was anything particularly special last week. The story has evolved. The story has evolved, whether it's negotiations versus non-negotiations, et cetera. So, again, I'm not surprised that there is this sort of massive sigh of relief. We actually knew that there would be a massive sigh of relief on Monday when we got the fake headline about a 90-day pause. So we knew the market was looking for something like this. But I think there's still a lot of question marks about the sort of what any negotiations would look like and what kind of economic degradation we see in the meantime.
I'd love to hear the Trump interview on Odd Lots, I have to say. We've only got a minute left, and we want to clear out in time for Fed minutes, Joe. But we heard the president said last night, this is a great time to buy. Said that this morning, in fact. Everything is going to work out well. Is there a world in which you're allowing him to eventually be correct?
Yeah, of course. No, I hope so. There's a few things. It's like, one is obviously you hope to have like a prosperous global economy, which would be fantastic. even prior to the Trump administration, there's been a lot of anxiety about the nature of both the U.S. and really everyone's reliance on China for domestic manufactured goods. Obviously, the Biden administration tried to affect change on that respect, at least with respect to sort of like cutting edge tech, like semiconductors, et cetera. There is a lot that could be better about the world. Again, when you look at how much the markets sell off, that's really indicative of like investors are much more pessimistic than they were about the state of the world than they were at the beginning of the year. But, look, like I said, I understand, and I think it makes total sense why there's this massive sigh of relief happening in markets right now.
Yeah. What a great chance to spend some time with Joe Weisenthal. Next Odd Lots ought to be a riot. It's great to see you,
Thank you.
At World Headquarters in New York. Kailey, imagine what has taken place since we took air at 1 p.m. This has been a remarkable period of time.
Well, and a remarkable rally we're seeing in the markets right now, up nearly 10 percentage points on the NASDAQ 100. That index heading for its best day since March of 2020, nearly 8% gain on the S&P. They're going to have more coverage of this on Bloomberg Business Week as we await the Fed minutes just moments from now as well. Carol and Tim will take it over from New York.